As oil prices plunge around the world, many fear Oklahoma could face another boom and bust cycle that has been the bane of our state's energy sector. But despite some rough patches in the oil patch, leaders in Oklahoma's energy industry are still cautiously optimistic, saying this is the time they hope to break the boom and then bust cycle. Well, filling up your gas tank now costs about 1/2 of what it did just months ago. Good news for consumers, but slowing growth in Oklahoma's energy industry, a sector of our economy that has insulated the state from a recession that has much of the country in its grip.
And that's one of the real benefits for Oklahoma is we do have the oil and gas, which is a counter-cyclical type product, and we're not seeing the downturn that they're having in the other parts of the country.
Larry Nichols is chairman and CEO of Devon Energy and says nothing impacts our state's economy more than oil and gas.
We've got about 1,400 people here in Oklahoma City that we employ, more outside the city. 5,000 overall, headquartered here. That creates an awful lot of economic wealth and economic growth because those people are out there buying houses and going to restaurants and buying cars, and it just creates a lot of prosperity that Devon and the other oil and gas companies in Oklahoma City are doing.
Yet as prices fall, so do the prospects for future growth. Economist Mark Sneed says when Oklahoma's oil and gas sector sneezes, the whole economy catches a cold.
There is a real concern that energy prices could continue to fall well below current levels. And if that happens, not only do we not have an energy boost, but it acts as a drag on state economic activity.
Talking about energy prices, is there a make it or break it point?
We think it's clear in the data that in Oklahoma, $45 to $50 oil in the $6 to $7 range for natural gas is where these companies sort of pivot from expanding aggressively to contracting aggressively. We don't believe the industry grows slowly or contracts slowly. It's all one way or the other.
That's because if global demand slows, prices fall and investment capital for exploration dries up, hurting not just oil companies, but all the industries that surround it.
Our sales have increased probably by 500 or more percent. And half of that's going overseas outside the United States.
Tom Golden is president of Tulsa-based Midwestern Manufacturing, a company that focuses on the niche market of converting tractors and bulldozers into side boom pipe layers for the oil industry, a conversion that saves the customer millions of dollars and is in high demand around the world.
We all tend to focus on our own neighborhoods and our own schools and our own mall, but actually it's a big world out there, and with the internet and the capabilities of wire transfers and ocean freight as the way it is, it's a very big market that no one should overlook.
Now, if you lived through the 1980s, I bet you're thinking, we've seen all this before. And for that, you are partially right. But the big difference today is in the solution that looks towards both technology and, believe it or not, alternative fuels.
Horizontal drilling has been the big breakthrough in the application of new stimulation techniques, and of course a lot of geoscience technology and understanding how these reservoirs produce, how to find them, how to complete them, and bring the gas to market. So it's been a lot of new technology, very much emerging in the last 4 and 5 years.
Chesapeake Vice President Jeff Fisher says new drilling methods allow the company to acquire natural gas from areas not typically high in production.
The field that we have that I just discussed could not have been discovered without 3D seismic, and that's only been in the last 20 years that we've been able to develop the opportunity to shoot 3D seismic where we have, and even in just the last few years and every year going forward, the computer capacity for being able to image these 3D images continues to grow.
Yet the big push for the future will not be how natural gas can be found, but how it will be used. The U.S.'s troubled car industry has been reluctant to manufacture compressed natural gas vehicles.
Up to here recently, we had vehicles that were capable of being converted to compressed natural gas. The demand wasn't there, though. So do you keep producing those and the demand's low?
General Motors Vice President Craig Epling says ultimately consumer demand will determine the success of compressed natural gas vehicles.
It is a chicken or egg. Do you produce the vehicles and then can't go find a fuel, or do you produce the fuel because if they're out there, the manufacturers of the fuels are producing it but don't have vehicles to provide it, why would they put those pumps just for that? So it's chicken or the egg, hopefully, and it looks like we're kind of growing together at the same time.
A switch, Oklahoma oilmen say, is not just good for business, it's good for our country.
Over time, we're going to have to find a way to use less oil and to use more natural gas, because it's our opinion as an industry that we can produce more natural gas. And as we're seeing, that the oil is a little bit harder to find.